I think we were doing about leverage we completed, and then profitability also we did complete, or did I calculate the return on asset and return on equity? To my knowledge, we did calculate about gross profit ratio and the net profit ratio. So today we may have to do from there on, that is return on equity and return on assets. So we can leave out return on capital employed, but let's focus on return on asset and return on equity. Did I do it or no?
No, sir.
Okay, right. Let's look at the, I think you are with the case study, ratio analysis, advanced one. And let's look at the return on assets. We need to calculate for both years. Ideally, we should take the average total assets, but for the time being, we'll take asset as it is. Then the ratios are like, I don't think that I should do it on the board. You all do, you all can calculate it. So profit is 875 return on asset, and 424 divided by, take the total assets, 24 billion 341 into 100, and 26 billion 047 into 100. Please come up with the answers. In 2019, it reflects as 3.59%, whereas in 2018, 1.62%. There is an improvement simply because of the profit increases. But if you just look at the total asset base, it has come down. So there are two reasons for increase of the return on asset. One thing is the denominator, the other one is the numerator. Both have been favorable in 2014. In a business, you don't have to have large amount of assets, but you should have small amount of assets, but most appropriate level of assets. That is the key. When a company has large amount of assets, what happens is that it doesn't generate return to satisfy the shareholders. That's not good. But by the way, that in this particular company, we could see the net profit ratio was not good. We discussed in the last week. Net profit volume was not good. So as a result of that, return on asset is quite low. But you can't benchmark with something else, but you can look at the industry ratios. But return on asset is a ratio which is in absolute terms. Like now, if you take bank return on assets, it's always like 1.2%, 1.5% maximum. That's the nature of that industry. So likewise, in this particular industry also, they need to maintain a large amount of asset base. If you just look at the composition of assets, even their investment property 1.2 billion, and they have an investment in subsidiary 3.2 billion. If there is an investment in subsidiary, ideally they should have other income. Other income also quite sizable, 777 million, because even though it is within the context of the asset base, it doesn't generate any profit from the normal course of operations. From the normal course of operations, it has not generated even less than 200 million. So 875 million is simply because of the other income as a result of the 3.2 billion. Okay, you can make some notes on that when you make a paper. So you need to focus on the base case, which is the particular company without investment in other companies. But if you take that as a holding company, of course you can be happy because there are the income as well. Ideally, what I want to say is that a company should not have large amount of assets. Never mind having assets, but they should generate more and more return. Of course, you can discuss. We will try to decompose this thing and try to exactly see. You can decompose the return on asset ratio like this. Can you see the board right now?
Yes.
Can be decomposed profitability into, I don't think it's visible. The ink is not provided. Profitability into asset turnover. Okay. Now profitability is like net profit ratio, profit after tax divided by sales into 100 into asset turnover is times sales divided by total assets. In this particular case, the profitability 875 divided by sales 33, 291 into 100 into sales 33, 291 divided by total assets 24, 341. So finally, if you cut with 33 billion to 33 billion, you end up with 875. The same as the previous case, like 3.59. So what is important to analyze when you say return on asset? So if you have an entrepreneur mindset, you have two components in this particular ratio. One is this, the other one is this. If I ask you which is the most important one out of these two ratios, as an entrepreneur, return on asset is a result of which ratio? Which part of the ratio? Which component rather? Which component is more important?
Profitability.
Calculate. Profitability is a reflection of what business is all about, turning the assets into sales. If you don't turn the assets into sales, the profitability will not be there. If you want to see the profits, volumes as well as a percentage, you have to ensure small amount of, this is the case. How many times the assets have been how many times the assets have been converted into sales? So you need large amount of sales, small amount of assets. Got it? So this ratio is very important. That is the meaning of return on assets. Okay. Unless you decompose it, you can't properly see it. There is nothing here. It is just a reflection of what you have done in the business. What you have done in the business is asset turnover. So asset turnover is all about return on assets. How many times? So ideally, the company should not have large amount of assets. Yes, they should have it. If they have it, of course, they have to turn it around. They have to turn it around so many times, then only a business can be reflected. Now, for an example, during the last couple of months, most of the businesses were closed down. But it doesn't mean that they have lost the assets. Assets were there, but there was no return. So obviously, if you just look at in most of the businesses, return on assets would have been very low, simply because they were not able to turn it around. Turn it around. So in this case, you have to cross-check with the industries and also absolutely in this particular company, whether they have been able to make use of those assets. Okay. Now, the classic example is film halls, cinemas. They have got a large amount of assets, but it has not been turned around for so long. So they are making losses. So business is all about now. Even if you take Toyota, Toyota doesn't make everything in house. They outsource it rather than having a big plant. Why should I give it to somebody else and get it done? So they don't have a plant as such. Even if you take Nestle, they try to get the coconut milk from out rather than having their own plant. It is cheaper than because at a time which is under stress, so that they don't have to close the plant. They have no low labor issues. So ideally, they can get it done or rather outsource from somebody else and run the business cheaply, less trouble. So that's the kind of business pattern prevail in the whole world. Even some companies, they never um, buy assets, they rent assets. Okay, right. There is an improvement over the years, yeah, but this is not only for ratio analysis, but your credit decision, how they have been successful in doing business. Right. The next ratio is return on equity. Let's calculate the return on equity. Return on equity is an equation where profit after tax divided by equity into 100. Very simple. Very, very simple. So the profit is there already 875 divided by equity based. How much is the total equity? 6247 into 100. The other one 424 divided by 5735. So get me the answers, please. If I am wrong, tell me that 2019 it is 14%, whereas in 2018 7.39. Obviously, that's not sufficient because any investor would like to see the return on investment in terms of this equation. Risk-free rate plus risk premium. In Sri Lanka today, the risk-free rate is somewhere around like, I don't know, in your banks, of course, my bank gives me even 8% sometimes for fixed deposit 1 year, let's say 6%. What is the premium for the risk that he undertakes? Ideally, it is not 6%. You would like to have at least 15%. So something like 21% would be ideal. Because there is an equation, you know, that savings equivalent to investment. What do you mean by savings? You save your money in financial assets. Equivalent to investments in real assets. Financial assets like loans, shares, and then again bonds, treasury bills, fixed deposits, savings accounts. Real assets, land and building, plant and machinery, then vehicles, equipments, stocks, debtors, things like that. If you invest in financial assets, of course, you might get a risk-free rate. The difference between here and here is the risk that you undertake. Because one of the differences is that you can liquidity is very high in financial assets. You can take back the whole amount of money that you have invested, so that you can get a higher rate of interest. But if somebody invested here, like in a business, what did I say? Land and building, plant and machinery, things like that. Of course, it is a business system. So he can't take that money back again as he wants. He has to do a market valuation and sell it off, and sometimes it takes time, and also sometimes probably he might not recover the whole amount of money that he has invested. So that is why it is risky side. There it is gilt. Sometimes it is gilt security, like a treasury bill, treasury bonds, of course, hardly any risk at all. For that risk, there should be a premium. So that is how the investors would love to see return on equity. So compare with that. Now, if a company is giving only 7.39 2019, useless. That is how they look at it, of course. So there is an improvement over the years, true, but then again, that is big. 14% even not sufficient enough for an investor. Okay, for bankers it is not a big thing for us, but if the investors are not attracted to a particular organization, there will be some issues. That is how you should interpret. Any question from that area? If you want, you can further decompose return on equity also. That is return on asset into financial leverage. Return on asset, profit after tax divided by total assets into 100 into leverage is total assets divided by equity. So you get the final answer, and further you can decompose this one also. Sometimes the return on equity is fantastic because of high leverage. Sometimes the return on equity is fantastic because of high leverage. Don't get trapped with that. If I take an example, let's say there are two companies A and B. I think I should have explained that one previously. Did I? Okay, so we have just completed about the whole profitability ratios. Any question from that area? Next is liquidity. Liquidity is all about the ability of the company to meet the daily commitments. The ratio is current ratio and the quick ratio. Let's look at how the current ratio is all about. Current assets divided by current liabilities. In 2019, current assets comes to 18,971 divided by current liabilities 15,400. Ratio is 1 to 1.23 times. Generally, we are expecting 1 to 2 times. Fantastic, because that means that in order to settle one amount of current liabilities, that he has got two times of current assets. But not necessarily that should be. It all depends on the industries. In these particular cases, of course, I'm happy with this. What is important is that if you just look at the composition, they have inventories about 8.4 billion, trade and receivable 9.7 billion, which are the basic two components need to be maintained in a company. Is being funded with trade and other receivable 5.8 billion and interest bearing borrowings 9.2 billion. So basically they have 8.4 plus 9.7, which closed, sorry, 8.4 plus 9.7. 18.1 billion is funded with close to 15 billion. The rest of the money, rest of the thing have been funded with equity. That is the meaning. So it is not short term. It's long term funding, either equity or long term loans. That is the meaning. So as long as a company can fund the short term liabilities with long term liabilities, they are healthy. Because in a short version, they don't have to pay the current liabilities. But if you look at some of the supermarkets, their current ratios are less than 1. Why? Ideally, their business model is like they borrow on credit and sell on cash. Large amount of assets are available in a supermarket, but their current ratio is less than 1. Does not mean that they don't have cash. They have enough cash. What do? They invest that in fixed assets or other investments. So that is the beauty of retail industry. Even if you take John Keel's, which is a conglomerate, which has got diversified industries, even logistics, finance, IT, real estate, plantation like. Retail is the key. Out of retail only they have made every profit. That is why they are hungry for branching out the entire network. Likewise, you can see say on the same road you can see a couple of supermarkets available. It's a very crazy business, you know. They are doing business with somebody else's money, and they take about 3 months time to pay off their suppliers, whereas they get cash. So when you say current ratio is less than 2 times or less than 1.5 times at least, not necessarily that really bad. Just look at the nature of the industry. Even if you take Nestle, their current ratio is close to about 1. They take something and give it. It's about the efficiency. So you have to justify the liquidity ratio only by looking at the cash cycle. Next thing is looking at the cash cycle. Okay, no need to calculate the quick ratio also. That is not a big meaning. Of course, if you want, you can calculate over here. What is the quick ratio? We have got current assets 18.9 minus 8.4. So 10.5 divided by 15.4. So less than 6.8. But never mind, as long as they can manage the bank borrowings. So you need to get a composition of 9.2 billion. For what reasons that they have borrowed as such? For what reasons? As long as it is the nature of the structure of the facility, then you can only justify. But by just looking at a number, of course, you can't make a interpretation. Be careful. Okay. Any questions so far? Before we go for the activity or working capital ratios. Now, all these all about, now if you just look at the C, capacity. Now, so far what we did, profitability we discussed, liquidity we discussed. Now the next one is deployment of resources, how efficient the company is. I told you there are 6 ratios. Okay, these are the 6 ratios that we are going to calculate. Right. Are you with me, by the way? I don't. You are with me, no? Hello?
Yes, sir.
Okay. Because I feel very, very, what do you call, isolated over here. Rather than just a computer, I don't have anything, any live at all. Okay, let's look at the first ratio, which is the stock turnover ratio. Hmm? So I'll be using the board. Since you have the slides, of course, I am not going to look at it. Stock turnover is, you need to get the cost of sales, 23,782, and then 28,129 divided by, ideally you should get the inventories average. But if you take average for, since you don't have average, rather, ideally you should take the average. I do agree. In this case, it's fair because it 8430 plus 8421 divided by 2, 8425. So the next year you don't have any number to take the average. Let's take 8421. I don't think any damage is done. But you need to be very careful about taking averages because now these are just 2 numbers which has been reflected on the balance sheet as at a date. But ideally this is not the average. If you take a year, average would be something like this. So if you take these 2 numbers, but the ideal average would be somewhere like this. So to avoid the distortion like this, of course, ideally what you can do is, ideally, take all 365 days stocks and divide it by 365. Or take at least 12 months average. The distortion will not happen. Okay, for an examination purpose, you can do this one. But for a practical purpose, this is not advisable. But I know in banks also you do the same thing. That is because that you don't have the information. So the answer would be times. Two 2.82 times. Three 3.34 times. Ideally, that should have been increased. Turnover time should be increased more and more times. Then only the efficiency is reflected. But in this case, it has come down as a result of having less amount of cost of sales. The reason is why less amount of cost of sales, they have dropped sales. Sales have been dropped as a result of that. Cost of sales also dropped. So they are not efficient in terms of that. While they are having less amount of cost sales and cost of sales, they had the same amount of stocks. That is why they are not efficient. But as far as the 2 years are concerned, but it may not be a very big issue, but you can make a note on that. Okay. And you can see the reflection if you just look at the other way around. The other ratio is stock. Now this is stock turnover ratio. But at the same time, you should look at the stock retention period or stock holding period. How many days the worth of stocks they require. So you can make it upside down and multiply it by 365. That means 8425 divided by 23782 into 365. Or else you can divide 365 by 2.82. You can divide 365 by 3.34. You will get the same answer. So that means 365 divided by stock turnover ratio. The answer is in days, 129 days. 129 days, whereas in 2018, it is 109 days. So that you can see in 2018, they wanted about 109 days worth of stocks, whereas in 2019, they wanted about 129 days worth of stocks. Per day, how much they want? So you can take 23,782 divided by 365. So they need about 65 million worth of goods per day. They need 65 million worth of goods per day. And to run this business, generally at any given point, that is idea. So this is what happens if you don't take the right average. Assuming that you have taken the right average, they need 129 days worth of stocks. That is how you get 8 billion 405 something, which is very close to that one because of this decimals. They need 8.4 billion worth of stocks at any given point. That's the whole idea. Any question from that area? Nobody is asking questions. That means everything is clear. Is that? So we had a fish vendor's calculation. Did I do with you? Did I do a calculation that the fish vendors that he bought about 5,000 worth of fish and sold at 6,000 rupees? Can you remember there was a question like that? Did I do it? Did it with you?
Yes, sir.
Okay. Then what is the stock turnover ratio of that fellow? I'm asking, what is the stock turnover ratio of that fish vendor? So what was the cost of sales? Okay, I'll tell you 1.5 million divided by average stock. So you could say that he has no opening stock, no closing stock. No. Make use of common sense. Average stock was 5,000. So divided by 5,000. So 300 times. So his stock turnover ratio was 300 times. Excellent. Highly efficient. Now there is a lesson out of this. Though he has a stock turnover ratio of 300 times high, what is the problem with this business? What is the problem with his business? Versus this. What's the problem with that fish vendor's business? Though he is having this high stock turnover ratio, his volumes are very low. It's not a volume business. It's a very small business, which we call the self-employment. Whereas this is a business system. Their volumes are big. Volumes are big. When the volumes are bigger and bigger, what happens is you can't expect a high turnover ratio. The fish vendor didn't have any opening stock or the closing stock, but he had an average stock. So with this and that, of course, you can make a very common idea or very clear idea of what is an average stock. Days worth of stock he has to have to run his business. Whereas in this particular one, they need about 120, 129 days worth of stocks to run the business. You can see large amount of retail shops are there. So in these shops, there are buffer stocks. And you can see sometimes, of course, they have year-end clearance sales. The display units are to be disposed at a very cheaper price because they can't sell them anymore. And they would have been used by some people who wants to buy them. Even today I went to a shop and they have a display unit. Display unit is being experienced by the customers so that you can't sell that item to another, because the brand new items need to be sold. They want to see it in a pack and open it and in front of the customer and make use of it. So what do? They have a huge amount of buffer stock, but not like a fish vendor. That is what you need to understand. So that is why they need working capital, permanent working capital. Is it clear? The same concept will be carried forward. Now next, the third ratio is debtors turnover ratio. Let's calculate the debtors turnover. Debtors turnover ratio, credit sales divided by average debtors. So we don't have any information about the credit sales, rather we do have sales. Debtors on the other side, trade and other receivables, 9.7 billion, whereas in 2018, 11.5 billion. Since we don't have that much of information, shall we take as it is rather than average? Because if you take the average, that will be a distortion. Let's take the numbers as it is. $3.26 versus 3.4. You can make a comparison as it is because we haven't taken the average over here. If you take the average, that would have been a different number. Again, efficiency ratio has to be increased many times. Never mind having credit sales, but it has to be highly efficient in terms of circulation. Whereas it has not. It has happened simply because the debtors amount has come down. Ideally, we should not have, any company should not have any amount of debtors, but due to the industry, nature of the business, they may have it. Probably these debtors are the sales dealers. So they may have given on credit basis. But we would love to see how many days they give it. So let's try to calculate. This is the debtors turnover ratio. Whereas we want to see exactly debtors retention period. So otherwise debtors holding period. So make it upside down or else take 365 divided by the debtors turnover ratio. So the answer would be in days. 1.7 days. 111 days. 112 days. I would reckon that they have a policy of giving away close to 90 days of credit. That should be the policy. So the intention of this exercise is to know exactly the policy of this company. How many days worth of credits need to be recognized in this company? Supposing entire amount is going on credit basis, but exactly we don't know. Assuming this is only 50%. So let's say it is only 50%. 33,291 into 50%. About 16,645 divided by 9783. So the turnover ratio is 1.70. 1.70. Okay. So 365 divided by 1.70 means 214 days. I don't think. So we can make an assumption over here. I don't think this company will give away 214 days worth of stocks. The assumption here, the entire amount is going on credit basis. Mostly the dealers, I believe. Okay, because as far as the debt amount is concerned over here, it is a large sum. 9.7 billion is a big amount. Trade and other receivables compared to the sales. Big amount. So you can't make a comment on it has been improved or something like that. Always when you do the credit practically, ask the customer how many days worth of, what is the policy of the company? What is the policy of the company on debtors? And two questions you need to ask. One, what is the percentage of debt sales, credit sales? Number two, what is the policy? So that you can come to a conclusion rather than by just looking at the finance. Oh, this is good for examination purpose, not for credit purpose. So this course is about advanced credit. So rather than just talking about numbers and calculations, that try to make some common sense and exactly make use of your knowledge to know exactly the efficiency of the company. Any questions? Let's go to the third one, rather the fifth one, which is the creditors turnover ratio. Creditors turnover ratio. Credit sales divided by average creditors. So again, we have to make an assumption over here. We don't have given the, we are not being given the information. So let's take cost of sales as credit purchases. And also we assume they make everything 100% on credit basis. If you go to the current liabilities, you can see the trade and other payables. So obviously, if you do have the notes, you should go to the notes and see exactly the trade payables only, not other payables. Remember that as well. Not the other payables like the tax or whatever it is, you should not take them up. You should take only the trade payables. But here, since we don't have information, we will take that as it is. 5813. And shall we take as it is rather than distorting? 5813. 7518. If I had some information, I should have taken the averages. .09 times. By the way, it is times, huh? .74 times. So on the naked eyes, of course, you can see it has been improved, but there is a consistency over a period of time. It is something like 4 times the collection efficiency. But ideally, we would love to see how many days they take to repay the creditors. So creditors retention period or creditors holding period. So you can easily make it upside down and multiply it by 365, or you can take 365 divided by creditors turnover ratio. $89 days and 97 days. Again, I have a conclusion over here. They must be taking about 90 days, 3 months time to pay off the creditors. So always they have a comfort of 3 months time worth of money that has not been paid to the suppliers. Okay. Now I need your help to develop the cash cycle. And in it, of course, there are 2 cycles, as you know. One is the operating cycle. Operating cycle is all about this explanation is bad, really. Okay, I will make it clear. Operating cycle is about days stocks plus days debtors. And then cash cycle or working capital cycle. Or cash cycle. Days stocks plus days debtors minus days creditors. Right. I need your help to develop the metrics. We have 2 years, 2019, 2018, and stocks, days stocks, days debtors, and minus days creditors. Can someone tell me in 2019 days stocks and 2018 days stocks, please? I don't have those numbers. You have those numbers. Tell me the numbers, please. Hello.
129.
129 in 2018.
109.
Good. Days debtors.
107.
100.
7.
Okay.
112.
Right. You can add it up. Okay. Days creditors.
89 and 97. 97, sir.
Okay. Hundred 47 days. 124 days. Now, if you take companies like this, always they have a lengthy cash flow. That is why you can see large amount of stocks are there. Okay. And if it was a supermarket, that would have been a different case, of course. If you take a perishable one, their working capital cycle is very efficient. Now, in this case, you can make a rough estimate about the working capital requirement even. That I will discuss in a length when I discuss the working capital financing. Here, in this case, their total cost of capital consumption in a year 23 billion 782 per day. You can divide it by to know the per day requirement 365 and for how many days worth of stocks or rather working capital they require, working capital, not only stocks. They need 147 days worth of working capital. 23,782 divided by 365. Per day their requirement is about 65 billion into 147. So that means including stocks, debtors minus creditors. So they need about 9.5 billion. 9.5 billion worth of banking facilities. Obviously, if you go to the balance sheet, frankly, you can see they have borrowed about 9.2 billion worth of financial facilities. Any questions? Is it clear what I said right now? You can make a rough estimate if you are aware of the working capital cycle or rather cash cycle. They have borrowed about 9.2 billion. Our answer is about 9.5 billion. And similarly, you can work it out in the previous year as well. Their working capital consumption, or rather cost of capital for annual consumption is 28,129 divided by 365 into 124 days. They need about 9.5 billion, but they have borrowed only about how much? 8.2 billion. That's all right, because we are talking about averages. This number is as at a date. This number is as at a date. So these calculations are very important when you make a negotiation with a customer. Otherwise, what happens is they might take you in a different path. So they can play out with you if you know exactly the calculations, analysis and everything. So simply you can work it out and see exactly their requirement. And also you can make an analysis like this and see exactly, depending on the nature. In this case, of course, you have to get more and more information. What is the percentage of sales on credit basis? What is the percentage of sales purchases on credit basis? Okay, any questions from that area? So this is not ratio analysis per se, but how you analyze a business and its efficiency before you make some funding. Any questions? No? hope that I can erase both. But unfortunately, this is not the case of unorganized organizations like mid-sized companies where they are. Now, this company has a formal set of financial information. That is why that we can get some accurate numbers. Whereas if you take some mid-sized companies, most of these financial statements are manipulated so that you won't get the same reconciliation. Please remember that. Can you see the slides now?
No, sir.
No. Oh, sorry. Right. There are some limitations in ratio analysis. You should be able to understand that. Right. Now let's go to the evaluation of the request. So far, what we did was the analysis, not the evaluation. So far, what we did was the analysis. Because even if you go to a doctor, what they basically do is to try to analyze the things and try to understand the problem. For that purpose only, they are asking various reports. So we also might need certain information to do the analysis. And once you know the analysis and once you have the outcome of the analysis, then you can go for the next step, which is the evaluation of the request. There we look at the feasibility of the project, proposed project or the business expansion. Proposed request may be for either investment purpose or working capital, whatever it is. Of course, we are just looking at two things here, market feasibility and the viability. If you just look at the feasibility, in the sense the operating ability, can they do it? To know exactly whether they can do it or not, of course, we have to look at the market appraisal. We have to appraise the market, technological capacities, operational feasibility, management ability, and environmental impact assessment. The outcome of this appraisal or examination is all about knowing they can do it. That is one part of the appraisal. The second part is the financial appraisal, which reflects the feasibility or rather viability. Some businesses can be feasible, they can do it, but no use of doing it, hardly any worthiness. The financial worthiness is reflected through only the financial appraisal. Okay. So even at the last presentation, I will be discussing about the risk rating. In your bank's risk rating model is developed based on these two parameters, two types of parameters. One set of parameters are coming under feasibility. The second set of parameters are coming under viability. So feasibility always market, technical, operational, management, and environmental. Viability is all about financial parameters. And combination of that only discuss the overall risk impact. When you see evaluation of the market appraisal, we basically look at the number of items that can be sold at what price. If you can remember my what do you call my equation, revenue minus cost is equal to profit. Revenue part is basically addressed by the market appraisal. They are the number of items and the price of it. As you know that we are in three sets of markets. One is the monopoly, the oligopoly, and the perfect competition. Now you could see in the last few days the repercussions of having oligopoly. Two players of gas. If we had couple of players, we couldn't have that much of a problem. Now, since there is an oligopoly type of a market, only that they are playing with the lives of people. It's almost a joke, no? and hardly any responsibility from the seller's part of it, because we have only two people over here. You should not allow oligopoly or monopoly. You should let the perfect competition, let the market forces to work. That is the newest economic discussions. If any, now even electricity board, what has happened? Now I do sell electricity to electricity board because I have a solar panel setup. There's only one buyer in the market, so high risk. If that buyer doesn't want, no one else who could buy my electricity. It should be diversified or liberalized, I would say. Then the information asymmetry is not there. That means that everybody knows what is happening in the market. So we are talking about a market like that, of course. Okay. And also you need to be very careful about the two things, types of products that they do when there is a proposal. Is it all about capital goods? Example, machinery. Is it all about intermediate goods? Example, raw materials. And the final product, consumer goods. In Sri Lanka, the market for capital goods is quite questionable, because the number of buyers. Now, what are these capital goods? Big machines. So most of the cases we have seen, the machines have been imported from export countries, like cheaper countries like China. China has the capacity of selling at a very low price because of the economies of scales. They produce in large scale so that the price of one particular good may be very lower, with which we can't compete. That's the issue. So when there is a proposal to manufacture capital goods, you have to be very careful about the market conditions. One thing is, can they manufacture at a cost that they can sell with a profit? Number two, the quality of the products. Because here in Sri Lanka, our research and development is very low. We have not been a country like manufactured oriented, except the garment factories that we have seen in the recent past. We are very famous for intermediate goods like tea, rubber, coconut. That is also thanks to the Sudha fellows. They have done the setup. Of course, we continue to do it in the same format. Ideally, we should develop some value-added products. Even if you look at the export component, export composition of our country, you can see some consumer goods, industrial goods. Okay, are the industrial goods, and the other one is yeah. We should have more and more industrial goods, like not the raw materials. Tea, rubber, coconut, we should not send them on raw form. We should add value and send them. Because as a country, we need to develop more and more brands. Brands have a huge value. I won't say so the cost, because you and me are experiencing a huge problem today as a date, because not having enough foreign exchange. The reason is we are not a export-oriented manufacturing country. Even look at your tourism industry now. Our exports are close to about $11 billion, whereas our imports are close to about $23 billion. So obviously there's a gap. Gap is covered with worker remittances about 7.5, 8 billion, and tourism about 4.5 billion. The worker remittances and the tourism both are service industries, which is not good. Which is good right now, but it is not a sustainable one. So we need to, like, if you look at the developed countries, why they are developed, they are mainly focused on export manufactured goods with a quality and price comparative. So take this point into mind and make sure that you are not getting into a trap by funding somebody who is not experienced in the market. Of course, you can see a lot of consumer products here in Sri Lanka, and we have a lot of intermediate goods, and also we have a lot of consumer products. But then again, these consumer products are not to the export market, but to the local market. Our local market is very small, very, very small. So we should promote consumer products to the international market. When it comes to international market products, of course, again, the things that I told you earlier, price, the quality. So quality standards are very much important. And to ensure that, they should have had a culture here in these factories. You can't straight away manufacture things and sell in the low international market. Very difficult to develop and establish a market in the international, because there are cartels even. Now, OPEC is a cartel, rice cartels are there, copper cartels are. So main products, of course, there are cartels, but we are much better in cinnamon products, tea, rubber, and all, of course. Okay. Paddy, of course, you know that paddy also I would prefer if it is a large scale paddy rice miller rather than a small rice miller. Small rice millers, they can't make a good business there. The problem with the small rice millers is they can't have raw materials in hand because the large players are eating into that. So that is the nature of the industry. You can't deal with that. No, that is not our part. Ours is the bankers, financing. So you should segregate them in a proper way and see the capacity of each and every one in terms of the market capitalization, market rather not capitalization, market acquisition. So ideally, if they are into regional markets initially, no problem. But if they want to go to the national markets, again the price and the quality is very concerned. International market, I told you, very difficult. And also, I told you about this risk of single buyer market. If you go back, of course, when you do the market appraisal, please look at the distribution arrangements. In any case, if there is not, today what has happened is mostly that the consumer would like the products into their doorsteps. Products into their doorsteps. If any product, if there is no online method right now, it is a disaster. It is a disaster. Even banking, of course, you know that how much that online that we are practicing. People love to see online delivery methods. In time to come, everything will happen online. And education is online, eating is online, transport and everything, logistics and everything is online. Most of the meetings are online. So whatever the business that they do, there is some kind of a proper distribution arrangement through digitization. So digitization is one of the key things that you have to evaluate in those proposals, how best that they are going to sell them in the markets. So obviously the brand is very important because online marketing is all about branding. People love to see the branded item rather than the unknown items. So if someone wants to come to the market, they have to ensure the brand is built and ensured. Brand building takes such a long time. Brand building takes such a long time. Recently, there was a proposal to manufacture about, this bottle drinks, cola and all these soda things. Of course, the entire market is driven by a couple of people, but hardly any differentiation if you take the products, almost the same thing. Anybody can manufacture those bottles, drinks, but the problem is brand. Brand reputation is very important. So you need some of the things that you can evaluate is the seven P's in case of a service industry. If it is a manufacturing, 4 P's, that I hope that everybody understand. What is the product that they manufacture? Is it the marketable product? Is it the price? What are the distribution arrangements? How do they promote it? And if it is an industry, are they trained? The service delivery people are they trained? Because this is a very big concern here in Sri Lanka. And I have seen the labor turnover is very high in certain industries because they are not trained and motivated. Investors are not knowledgeable of the importance of training people. In good companies, the training budget is very high, especially with regard to service industries. So that is why partly they are trying to digitize, and the minimum amount of people will be kept and will be trained. Physical evidence is the ambience that of the particular business, and that's also very important when it comes to a service-oriented industry. Let me tell you one example. Recently, I got a proposal to develop a reception node. And I rejected twice, of course. Then again, there was a pressure from the branch, and they have already committed to the customer. Now, when it comes to a reception hall, it has to be a very glamorous place with a lot of space, space for parking, space for building, and everything. I would say it is in acres, but in this case, it is about I can't remember even about 20, 30 purchases. When I went there, there was no parking space, and the building is half-hearted, and they will put up the first floor and second floor with the income that they are going to generate out of the business. People won't come for a wedding in a half-hearted building. The ambience is very important, and you have seen nowadays the receptions also like palaces. That's all right. That is what the people need. Fully air conditioned with decorative lighting systems, and everything has to be there. I know the difference between a reception hall and a banquet hall. If you go to a hotel, of course, everything is perfect, mostly. The services, and then again the seating arrangements, chairs, and everything is up to the standards. But if you could see some of the reception halls, the building is excellent, but the service is very bad. Even the furniture is very bad. Can't help, because if you just look at the prices, there is a huge difference between these two prices. So you need to be very careful about funding reception halls, because if it is not up to the standard expectations of the customers, you will end up with NPLs. Processes, of course, fully digitized, and then technical. Technical appraisal is all about the technicality of the particular proposal. I know that most of our bankers are not savvy in technicality. But what is important? The appraiser's ability to adequately address all the technical areas which have a bearing on the success of the project. What are they? There are 5 areas. Number 1, location. Number 2, the production process. And then the assets and the capacity of plant and machinery. And the building works and input-output analysis. Number 1, location. Extent of the land. If you take a project, the customer might say that I need to buy acres and acres, but you have to focus on the minimum requirement of the land, not the entire land. So we should fund only the entire land, because I don't mind funding a land unless it is bring return. The entire land should bring us a return, and there should not be a land which does not make any return. So you can't fund to a land which is in isolation. Okay. Proximity to raw materials, of course, it all depends. Like in certain areas, it is not a matter. But if you take something like example, something like coir products, obviously that has to be fixed into the coconut triangle. You should be able to easily get it transported. Okay. And more than anything, market is not an issue today. Market is everywhere, and marketing patterns are changed. So because of the digitization and everything. But what is important is labor. Today, the labor has become such a big issue. For your information, some of the companies are trying to bring the labor from either Bangladesh or Nepal, countries like that, because our labor is not hardworking labor, and there are a lot of attitude issues. You could see some of the garment factories are going into very remote areas in the villages. Despite that, there are transport problems from the harbor and the ports, but still they love to have fresh labor. And we could see some of the issues with the industrial zones or the Board of Investment zones. The labor has been corrupted. There are enough issues. The most reputed companies, not in the industrial zones, but in the villages. And you could see some of the investment like buses, transport issues. So they just take care of the entire community of that area to ensure the availability of labor and the quality of it and the mindset. And today, you need to discuss about the child labor as well, because it is a matter for the buyer, not for us. Buyer. And utilities, water, electricity, and fuel, everything. It's ideal in that case, of course, go to an industrial zone, because there are large amount of industrial zones, BOI zones, trade zones. Okay, because everything is there in it. Otherwise, what happens is you have to look for it, especially with regard to electricity. You have to be very careful when you do analysis whether there is an electricity connection. And also you have to work out the KVA requirement. Otherwise, what happens is that you have to get a transformer fixed there, and that will be an added cost. Never mind doing it, of course, make sure that you factor the cost into the total project cost. Okay, water sources, very important. Like if it is an ice factory, the water source has to be from the ground rather than from the pipe water. Pipe water generally don't used, because there's a problem with the coloring and the life of the ice cube. So likewise, there are many concern issues that you need to consider when it comes to the nature of the project. And what are the disposal systems, facilities available, because always there's the polluted water system. But today, most of the companies need to recycle the entire thing. Recycling is a must. Recycling is a must. Transportation systems, whether the road system is quite enough to make sure the transport system. Production process. Generally, the continuous production process is quite expensive, and batch processing also, but assembling is the cheapest way of doing business. Nowadays, it is more popular. I recently went to a computer company, and it's very simple. Simple in the sense that there are 4 components which fix together. You might be thinking that it's a big business. No, it is not a big business. They bring the entire component set like in a knockdown pack, of course, and put it into one computer, just a few minutes time. Even there are car companies which are assembled here right now in Sri Lanka. One is a micro one, the other one is the DFCC, DEF. What is that new car? I think it is done by AMW. DFSK. And Ideal Motors also doing something. Mahindra is being assembled here. That's cheap because car manufacturing itself is a very expensive, very, very expensive. Unless you have the culture, experience of doing manufacturing, you can't do it. So assembling is much cheaper. Better we start with assembling. Later we can move into the continuous process. But if you take an example like poultry, is a continuous process here in this country. So it is a continuous from the very start. Like they do the breeding, hatchery, and then it goes to a maturing process like close houses, and then the processing unit. Finally, it's into the retail industries. Like either they have their own network of retail, like if you take Kuzeller, apart from the supermarkets, they have, it is their own network. So from A to Z, they have the entire network. Continuously they do it. Apart from that, they have the feed mills as well. So they are into, most of the people are into cultivation as well. They need maize. Okay, and soya. Soya is imported and maize is cultivated and mix it and do the feed mills. Sometimes because there is a shortage of feed, then the production process is hampered. What I wanted to highlight is when there is a continuous process, it is expensive, and unless there is a kind of experience by the company, they won't be able to do it. So initially, you should not allow to do a continuous process. Let them expand it later on. So you call that backward integration and forward integration. Never mind doing backward and forward integration later on once they are fully established. Otherwise, they can't do it. So let them start with one particular production unit. Either they do the processing or do the maturing or do the hatchery or whatever it is. Likewise, in any industry. Then the determination of the requirement of the assets and capacity, plant and machinery. So if it is a production process, ideally you should take the production flow map and the list of machinery that have been required. So before you do the funding, you should visualize how the machines are going to be fixed on the floor and whether there is, the next step is that we will discuss civil work. But before that, let's look at the production flow and the machineries that are required and how that is going to be connected to each other. Especially with regard to a plant. Plant is a connection of machines, the chain of machines. Sometimes some of the machines are being fixed to the floor with cement and concrete. So generally a plant cannot be taken away unless machines can be taken away. Now for an example, if you take a printing industry, the 4-color machines can be taken to some other places. But if you take a rice mill, mostly the elevators can be taken out, but then again damage will be done. So before we do the financing for a rice mill, you should ensure that particular rice plant is going to be forever in that particular place. And there are various other environmental issues also should be taken into consideration. Okay. So production equipments, the machines that are required, and then again transport equipments, lab requirements, storage requirement. Let's take an example of rice mill. In a rice mill, the raw material is paddy. Paddy is coming in only 2 seasons, so that they need to store the paddy at once. So that is why they have a large paddy storage. Now, in the recent past, they have a big issue. No? The people went into paddy storage and see whether there is a paddy storage. That is because they don't understand the industry. Large scale paddy millers, they need to store the paddy for the entire year because they are not going to stop the machine. You should understand the very simple logic. They are not going to stop the machines. Machine will run continuously for 24 into 365 days. Given that, if they don't have the sufficient stocks, how they are going to run the machines? So whatever said and done, they will have a large storage and they will be filling that during the seasons. So somehow or other they have to procure the paddy. Somehow rather. It's not like the paddy marketing board that they paddy, because the paddy marketing board you could see that they test the quality of the paddy and buy on a particular standard. Likewise, the paddy millers, they won't do that. Of course, they buy a whole stuff and they do the cleaning and drying part is in their houses. Otherwise, they can't run it. Okay? And unless they have a large fleet of transport vehicles, of course, they can run the machines. They need transport vehicles to purchase the paddy. They need transport vehicles to transport the rice, both ways. And apart from the service equipments, welfare facilities, and if you take large operations, of course, there is a back office like maintenance business, maintenance machine. Time to time the machinery have been they require some updations, damages are done. So they need repairs and all. Okay. If you take a weaving mill, the same story. So we are yet to experience this kind of production equipments, production machinery, production processes because our country is not into that. But anyway, there are developments with the president's vision statement. In our area, there will be a 500-acre area for weaving mills. That means that we will be importing yarn from somewhere else and doing the fabric over here, rather than bringing the fabric from China right now, because large amount of fabric rolls are being imported from China at this moment. Why don't we manufacture here? Likewise, we can start with something and develop some industries. So we have enough garment factories over here. So we can do the manufacturing of the fabric and give it to the garment factory so that there won't be any shortages. Okay. Civil work is something that building buildings and all. So we will take it up after break. Any questions? Now exactly 3 o'clock. Are there any questions so far? No? Right. Let's take about 20 minutes break. or rather 25 minutes break. All right, let's look at the civil works. Now, so far what we have been discussing is location, and then the production process and technology, and requirement of the plant and machinery. Requirement only, that we will just look at how you look at the pro forma invoices and all later on. And civil work. Civil work is about construction of the buildings. This is especially with regard to a hotel, of course, very important, because hotel doesn't have that much of plant. They do have, in case if it is a star class big hotel, there are enough plants like storage system and uh, power plants, and then again steam boilers, and then again water purification systems. It is almost like a factory in a star class hotel. But more importantly, the requirement of the building and structures. So in this case, you have to look at who is doing the architectural work. So chartered architect, not just an architect, chartered architect who has got some credentials is very important in this context. And also see whether the chartered architect has got some experiences. And then again, the structural engineer. Structural engineer is the person who is doing the columns and pillars and piling, and also doing some mathematics things and structuring the whole building. Structure is very important, more than the architectural designs. Sometimes in certain projects, both these people are in one. Like if you take Alta building, you can see that angle building is developed. That will not happen by an architect itself. He has to be a structural engineer as well. Otherwise, nobody will do that. So he has got both the expertise. Then only they have developed such a building. If you go to Dubai and all, of course, you can see marvelous building structures. Okay, and also today the structuring and also the construction methods are quite different. I saw in one hotel, of course, they were doing some like the they don't have the beams, like they have some wires. On the wires only they do the concrete works, something like that. And in a project, very important parties are the drawing is done by the architect, and then the structural engineer. Consultant engineer is the one who is doing the supervision time to time, and he does check the architectural work as well as the structural work, whether the things are happening according to the structures and the defined plans. And the project manager is the one who is doing the overall management of the project manager is the most important one. Now, as bankers, when we do the visits, we have to get hold of the project manager, because the project, you should not contact all. I don't think that you can contact the civil engineers and all. They are not. They are in the site as always. But the project manager has to be there all the time, and he knows in and out of the entire project and everything. So you should always contact the project manager. And then contractors are there who is doing the construction, and the main contractor may give it to subcontractors. Even we don't have any contact with the subcontractors, the main contractors. But only thing, you should see whether they do follow the bidding procedure and give it to a contractor who is very much thorough on the subject when it comes to a large building or structural work. And then the cost estimation, that we call that BOQ, is done by a chartered quantity surveyor. And this is very important, because though we are not quantity surveys, that we should have some adequate knowledge to look at the details of the bill of quantity, because I have got enough experiences. In one project, of course, the quantity survey had missed 2 floors, whereas in a big project, of course, they had to revise the entire BOQ. And the earlier it was about 5 billion, later it came up to 6 billion. How can that happen? So silly mistakes are happening despite their expertise. So don't believe any expertise. Don't believe any expertise. That is my own experience. Don't believe any consultant. Don't believe any tax consultant. Don't believe any accountant. So believe yourself and do the checking. When I did my house, of course, I did check line by line the BOQ, because when you do the checking only, you realize some of the things, of course, they do estimate for inferior quality things. Like for an example, I'll tell you. Now in my house, of course, I have put aluminium windows. Okay, aluminium windows. Of course, when you fix the aluminium windows, mm, there are two profiles. We call that profile: low profile and the high profile. Low profile in the sense the borders are very thin, whereas the high profile is a very nice one, very hard, and that always they had coated for low profile so that you can see the aluminium windows but low profile. By the time you are going to see the fixing only, that you realize that is low profile. So by the time they have ordered the quantities even, so they won't change it at that time. So likewise, even railing of course, horizontal or vertical system. When it comes to a vertical system, it is expensive. Okay, and what is the thickness of the concrete, and what are the materials that have been used. You need to count one by one and exactly. So as a project officer also, you need to do the same thing. Don't depend on the numbers that have been estimated by somebody else and given it away. Let me tell you one of the other examples. One appraisal, it was for a reception hall, of course, some years back, but it is a classic example. Our officers had done the evaluation for an 18 million BOQ. Whereas after doing that, of course, this customer had gone to various contractors to get it done. None of the contractors had accepted it. The person who did the estimate, the BOQ, the Chartered Quantity Survey, had done it for 18 million. Finally, it came up to 40 odd million. So we had to reverse the entire thing and granted a new loan of 30 odd million. See the difference? That was our fault rather than depending on somebody else's estimations. That you can't rely upon anybody else's. So you need to have some common sense, common knowledge. If you don't have it, do some research work. Ask somebody else. That is your acumen. That is your expertise. So don't expect the bank to teach you everything. You have to get somewhere else. We are not, even in a program like this also, we can teach you everything. We are just giving you the guidelines only. Within the context of the guidelines, there are many things that you need to learn. So that can be learned only by doing something. So you have to start doing something. The other one is the work schedules, networks. Like, I mean, that every big office, every site office rather, you can see some diagrams when they are going to start the work and what are the activities that are being taken over and what are the parallel activities, what are the activities that are going on right now. With the time framework, they have mentioned all the works like a very nice diagram. Okay, so these work schedules are very important for us to decide the grace period of the project. Okay, within which of course they can't pay capital and interest both. But ideally, but in Sri Lanka, when we structure facilities, we ask the customer to pay interest sometimes. That is wrong, basically. We need to factor the interest accumulated and the capital during the grace period into the later years to be repaid. So you have to overload that component in the later years. So when you calculate the DSCR, don't expect the project to start with 1.5 times in the very first year. That won't happen. So if that does not happen, then you have to work the DSCR with a low scale of repayment of capital. So you may develop a capital repayment on a staggered basis. We call that balloon payment system. Okay, something like that. Okay, for that matter, of course, work schedules are very important. And you need to expect that cost overrun happens in all the projects because these projects are unique. Not that hardly any experience. These are unique and new projects. So when it comes to a new thing, of course, it takes time even, during which period, of course, there can be a lot of disturbances. Prices may escalate. Pandemic may happen again. And then again, there can be accidents. So time overruns. Whatever the disturbance is a cost, added cost. And sometimes the modification happens. Because when they do the building only, they realize that this has to be somewhere else. So they do some adjustments even. Can't help because it's a unique project. So even when I built my house also, we did some adjustments, alternations. Finally, it is cost. And it cost me about more than 2 million for the cost overruns in my house itself. Imagine if it is a big one, there will be large cost overruns. So you have to expect that. What is important, who is going to bear that? So we always make a note or a covenant. Cost overrun should be borne by the customer. But finally, again, you are structuring a loan to the cost overrun. So be mindful about those things when it comes to civil construction. Okay, because civil construction is been happening. It is not like buying a machine or a plant. Plant, of course, by the time you buy it, of course, you know exactly the price is all about. There can't be any escalations if you properly structure it. Because even in a plant, of course, you should know the CI price, landing cost, installation charges, training charges, maintenance charges. In most of the cases, most of the cost will be capitalized into the machine. So you take the total sum of the costs and then try to structure the loan rather than the CI price. Otherwise, he may have to run after another bank to find the rest of the money. Okay. The production process, as I already discussed, you input, process, output. There you have to be very concerned about. Input is basically the raw materials, process is work in progress, output is the finished goods. In certain cases, there are sales also, which is debtors. And under each and every point, of course, you should know the amount of things that they are going to import, what is the conversion ratio, and what is the output. Like for an example, if it is rice, out of 1 paddy kg, of course, the rice will come only for 65%. Paddy husk is about 15%. Broken rice is about 5%. So in paddy millers, the biggest profit is coming not from the rice itself, but also from paddy husk, broken rice, bran rice. All the stuff make money. So that also can be taken into consideration when you work out a project in paddy milling and all. And also the number of working days is very important when it comes to working capital calculation. And also if there is anything like licensing or royalty fees need to be paid on the number of items that they manufacture. Those parameters are very important for us to look at the technical part of it. Now, technical part is basically all about the cost of the project. Okay, cost of sales. Sales, of course, we just look at the revenue side. Now it is cost of sales. So final outcome will come as it is. If it is trading, of course, cost of goods sold and the fixed expenses. What are fixed expenses? Salaries, and then power, and then rent, insurance, and various other admin cost, marketing expenses are the fixed expenses, whether there is any sales or not, of course. It happens in the general businesses as well. And then the margin of profits and all the volume of profits, very important. Margin itself, let's say 15% now. We just calculated about the margins. Margins are okay, just to check whether the across the industries, whether the margins are all right. But then again, the volume, if volumes are not there, because end of the day, loan is paid out of profits, not from profitability. Loan is paid out of profits, not from the profitability. So that's a concern. Any questions? If it is a service income. Now, hotel industry, health industry. Okay. Service income is now, if it is a hotel industry, the room charges are coming out of it. And then the highest ever income is not coming from the room charges, but from the food and beverage. Beverages are very expensive. And they have enough other activities, because in the hotel industry, of course, in our country, we have a big issue. The issue is that we don't have a tourism industry, we have a hotel industry. Tourism industry is a large industry. The tourism industry covers MICE tourism, wellness tourism, health tourism, and then again leisure activities and various other things. Now, if you take Malaysia, Bangkok, they are into MICE tourism. Lectures, conferences, things have been arranged. While a lecture or the program is arranged, of course, the tourism also, hotel is also coming in. Airlines are coming in. So airline and every logistics, small boutiques and everything together in a service industry like that, of course. For which, of course, we had to have a very comprehensive strategy. But here in Sri Lanka, we have enough resources like the beaches, mountains, heritage. There are, I think, 7 or 8 heritage sites in our country. Natural beauty is there, cold weather is there. Within couple of hours, you can anybody can travel across the country within couple of hours. But I don't understand how best that we sell this country for tourism. So it is not a tourism industry. We have national parks are there for wildlife. Okay, that's not properly regulated and also properly managed. But in other part of the world, artificial things are done. Now, if you go to Malaysia, the theme parks are there, theme parks. But here in Sri Lanka, we don't have that. Okay, towers are there, but there is Nelum Kuruna is built, but it is not open yet because it is not just isolation, but it has to come along with some other tourism activities. But anyway, what you need to understand is that you might take the 2 room charges, food and beverages, and the income coming from all other activities. But there also you have some direct expenses, salaries, and then maintenance cost is very expensive. Very expensive. Food and beverage, of course, is a variable cost, but maintenance, they're very expensive. Sorry, direct expenses, salaries, and food and beverage, things like that. Fixed expenses, like electricity, maintenance, refurbishment expenses. Even though it happens once in 2-3 years, but of course you have to amortize or rather depreciate throughout a split into a couple of years. Right. So we discussed manufacturing, trading, and services. And the operational management appraisal. This is basically the entrepreneurship, entrepreneurship is all about taking risk and doing business. And in it, of course, the leadership is very, very important. Can these entrepreneurs now see the entrepreneur's ability to manage the project during implementation and operations? Operational feasibility studies address the following areas. 1, process development and machinery installation. Before that, you have to complete the civil construction, for which, of course, there should be a leadership. And otherwise, what happens is there will be a lot of other barriers to do the things. And even bring down the machinery, there will be some issues. At the harbor, there will be some issues. And paying duty and all, there will be some issues. How to manage them? Okay. And evaluation of the cost benefit of the implementation and then operations. How best that they can make it like without spending too much of money. Implementation, the commercial operations, out of which I believe the HR management is the key, because management is all about how flexible you are in reaching the customer. In that case, HR is the biggest one. Leadership is all about working with people. I'll repeat that again. Leadership is all about working with people. And working with people in the sense that they need to acquire the best people in the country and then deploy them in an effective manner. So recruitment as well as deployment is very important. Unless otherwise, what happens is any business system will collapse in the absence of better people. So in project is all about managing people. And also the procurement of raw materials. What are the systematic scientific methods of procuring raw material rather than going here and then buying things? There should be a proper system. And marketing, distribution arrangements, management of resistance. And sometimes that there are issues, enough issues are coming up, of course. How best that they can manage the resistance. The next one is very important, developing in-house strategies. My experience tells me a lot of successful business entrepreneurs have their own strategies rather than copying from a textbook or elsewhere. They would have seen them, but then again, they have their own ways of doing things. Very successful. Very successful. How best that they can adapt to the changes in the environment. The classic example is the people who were able to adapt to the pandemic environment are successful. And some of the businesses have made profit better than those days because they capitalize on in the environment rather than cursing for the environment. People who are smart will go with that and do the adjustments. Okay. Environmental aspects. So this is, in Sri Lanka, we have regulations. The regulations is basically coming from, in terms of environment, the Central Environment Authority, which has got some central offices, central office plus the provincial office in divisional secretariat. And we have a gazette notification. In it, the projects have been categorized into 3 sections. Okay. Category A, which is the highest sensitive projects like resettlement and all. If it is a project where part of the community need to be resettled in somewhere else because there is a lot of disruption to the earth, environment, and it is a very highly sensitive project. And category B, where there are constructions, hardly any resettlement or reshape the earth, but to a certain extent, but not like blocking a river and putting up new roads and all, not that. They are B category. C category is hardly any impact to the environment. Having a shop or generally where the employment capacity is less than number of 5 are categorized as C. So for projects which comes under C category doesn't require environmental protection license. But for projects which comes under B category and A category, definitely require environmental protection license. And remember, it is a license. License are issued only for a period, generally 1 year. So every year they have to renew it. License has to be renewed. And it is a process. It's a process. You know that in recent years, some banks have environmental and social management system. In my bank, we have a policy developed. I think Bank of Ceylon, some part commercial, HNB, those banks have ESMS, environmental and social management system. In it, there are dedicated officers who will go through a due diligence process to check whether the particular project does any harmful to the environment and have they got the required licensing. Now, I have given some example. If it is a hotel which is to be built in the beach area, and you have to get approvals from the Coast Conservation Department, and some of the projects require UDA approvals. So, and then again, obviously, you can't build anything. The lowest level requirement is coming from the divisional secretariat, provincial council, of course. They have to approve the building plans. Even you can't put up a parapet wall unless you get approvals. Okay, and you can't cut a tree even basically without approval. So there are approvals, registrations, and licensing. Now, the recent example is that we are working with the government with a special loan scheme for organic fertilizer. Whether it is organic or chemical, to manufacture and sell fertilizer, you need to get registered with the fertilizer secretariat in Sri Lanka. In addition to that, you need to get a license from them. To get a license, you have to have some kind of experience. That means that you should have done already fertilizer manufactured and get a lab test from ITIO, SLSO, Veritas Bureau, somebody, of course, and prove yourself you have followed the basic methods of manufacturing things. So these are very crucial, and I know if you are to put up a hotel in a jungle, of course, I think I can remember there was a project. They had taken approvals from 20 odd authorities, 20 odd places, and there's a series of risks now. Basically, for tourism, there is an authority here in Sri Lanka, Sri Lanka Tourism Development Authority. They have a one-stop shop. You go there, of course, they will do the coordination and tell them exactly. And for most approvals, they will help you, but they will charge you. Even for a matter like water, you know, there is a water bed, like from the surface, earth surface, you can dig a well to a certain extent, but not up to the point of rock. because underneath of this soil bed there is a rock. So if you want to put up what do you call this tube well, ideal tube well, that you have to dig up to the rock and there should be a crack on the rock and you have to drill the rock and take water after. So that is how a tube well is done. So it is a big issue, and unless you get approval or permission from the water resource board, because that bed is not belongs to us. Because for your domestic matters you can dig a well, but not more than that. But I have seen the tube wells have been done in for cultivation matters. That is not a big issue, of course. As long as the tube well is not within the residential area, there won't be an issue. But otherwise, it's an issue. And if I simply say you can't do anything unless approvals are taken, you can't do high shock flow pollution, that you can congest any industry by putting machines or people. Okay, even if you put up a kind of a shopping mall, there are requirements where there are a number of toilets and parking space and all, a minimum parking space. Now I know one of the cases that we have permitted one restaurant that he's struggling to get a permission because the required parking space is not allocated. So those are issues. And so you can't discharge anything except water which is related to rainwater. Nothing can be discharged. You can't disturb with vibrance. You can't disturb with lights. You can't disturb with noise. You can't disturb the others with smoke even. If you want to discharge the smoke, it has to go to the air. And if you feel that this smoke will go across the lands, then you have to put a smoke pipe to a higher scale and release the smoke. That is how you should be. If you very carefully look at some of the buildings, if the kitchen is at the floor, and you may see that smoke is coming from the down to the top. If in hotels and all, time to time, it's at the top only that they discharge. Across the building, you can't do it. Okay. And nowadays, something also very important, that is low energy efficiency. If you go to some developed countries, of course, the factories are being built with the support of sunlight. They try to absorb the sunlight. Even when I put my house also, I have done to the max, like I mean that even during the night, that if you switch off your lights, of course, you can see the entire inside, of course, because a lot of windows are there, so that sunlight is taken inside. You can do some planting even, and the new methods of that even the houses need to be smart houses nowadays. Well, how do you say smart houses? Even if there is a roof top, and so the roof need to be covered with solar panels so that you can generate solar and give it to the grid. And also it is very useful because today we are talking about renewable energy. What are the things that are included under renewable energy? That is solar energy is the most popular one, wind energy and wind power, and then again biomass, biogas, and hydropower. Those are the basic 5 ways of generating renewable energy. But mostly that we have concentrated on hydropower, which is almost exhausted right now. And country, you know that bankers need to know exactly the vision of the government. And by 2030, this entire country is going to be converted into 70% renewable and 30% fuel powered fossil, fuel powered electricity. So 70% is a massive number. So what you need to get the sense of this direction is that time to come, you have to come up with a lot of loan schemes to look at the solar energy side of it. And there was a scheme came from ADB, which has been stopped right now, but in time to come that also will be restarted. I believe, that is my perception, I'm not sure, at a very low rate of interest. And that's a good investment even. I have done it, of course. I'm getting a sizable income every month because I have put about 10 kilowatts, so that my consumption is very low. I export my extra energy to the national grids. I earn about close to about 25,000 rupees per month. That's a sizable income. So you have seen the Mass Fabric Park. I think they generate close upon to 25 megawatts, not 1 megawatt, 25 megawatt. It's a massive generation, massive. So in those days, it would have been just a roof. Now it is a solar generation. Okay, so intention is your consumption is taken care of by yourself. So you don't depend on, you depend, but right now because the hardly any battery backup system here in Sri Lanka, but you could generate more than what you need, so that you are helping the other part of the country as well. So that is what we call the low energy efficiency. How nowadays you need to have that LED types of bulbs where the energy consumption is very low, and make sure that more and more sunlight is taken care of the requirement of energy, lighting systems, and also the solar power is generated. And biomass also being used, some of the hotels and all, for energy requirements. When it comes to large project, environmental appraisal is a must. You have to be very happy. And the other point that I discussed was that ESMS, Environmental and Social Management System, that you have to have as a policy. Remember, this policy is very important when you negotiate with other part of the world, like, and we are also negotiating with some of the banks, especially multilateral development banks. And they definitely, if I tell you some example, World Bank, ADB. And right now we did a project with IBSL, Asia Infrastructure and Investment Bank. And all of these banks require a proper environmental and social management system in your bank. So you have to have a dedicated department, dedicated officers who should be trained frequently to look after these environmental impacts. Yes. Questions? Any questions? I was talking too much.
So what is the policy with regard to liquor industry, ESMS policy with regard to liquor industry? What is the percentage we can lend for liquor industry?
Hardly any percentage. It is a policy of exclusion, because some of the funding lines come along with an exclusion list. I know from ADB and AIIB even, they don't allow us to fund to liquor industry, even wine even. But I can remember with ADB, they allowed for beer and all. And one of the other example is net fishing is not allowed. So it is your bank policy and also donor banks policies to make sure that is an exclusion list. Otherwise, hardly any percentage, of course, you can take it as even 100 if you prefer funding liquor. That is how it goes. It is just a matter of exclusion. Okay.
Thank you, sir.
Any other questions? By the way, you can interrupt me at any point and stop me and ask questions. I love questions. Okay. Right. Now, previously we did a ratio analysis, didn't talk about any future, but ideally you should do the projections to make sure that the particular investment can recover from the investment, that we can get our loans recovered. So basically we do projected income and expenses statement, and also projected cash flow, and also the projected balance sheet. The most important one is the projected income and expenses statement, unless otherwise you can do the cash flow. And the difference between the income and expenses is basically income is based on the accrual basis, whereas the cash flow is based on the cash basis. If I tell you a very simple thing, of course, under projected income and expenses, the depreciation is taken care of, but whereas in the projected cash flow, we don't take the depreciation into consideration. And also in the projected income and expenses, only the interest is taken care of in a loan, whereas in projected cash flow, both loan capital and interest is taken care of. And that is why there is a big difference between projected income. And some of the cases, of course, the hardly any profit, but the cash is there. And some of the cases where there is profit, but there is no cash. If I tell you a simple example, that if the company is selling on credit basis, so the cash flow has an impact, because P&L would be fantastic, but there is no cash, because even if you project certain amount of cash, if that is not properly coming up, like if there are delayed payments, so cash flow will get hampered. Why we need to look at the projected balance sheet to ensure that once the loan is granted, whether there is any adjustment to the leverage ratio. Because after all, if the leverage is going to be high, and then the bank will be in trouble. That is why the bank is always asking a certain percentage coming from the sponsors or other owners of the project. Now, as a norm, of course, when I do start negotiations, always I used to say, you have to come with at least 40% equity. We will fund with 60%. That is not across the board, but that is how I start, of course. Then you can bring it down depending on the nature of the project, risk of the project, and strength of the cash flow. So then you can later on make some adjustments. But we always look at some stake from the shareholders on cash basis, not on accrual or loan basis. Because I have seen some cases where they say that we will bring so much of money, but hardly any money in their hand. And in these cases, what we do is basically we make a covenant. The investors' contribution has to be upfront in cash, so that we make sure that they put the money into the project, so that there won't be any issue. I have seen in my bank as well as in other banks, where this problem is a serious problem, because you start the project, later on you find that the investor doesn't make any money to the project, so that he tries to depend on the bank's money. How do they do it? They either manipulate the cost estimations, and they make some promises, later they don't do it. And initially, some or other get the bank to fund the project, and the bank fund it and start it. Halfway down, they say that we don't have money, please fund further. So it is almost like a marriage, and you can't get away, because you can't auction a half-hearted project. Remember, that is very important. You can't do anything with the half-hearted things. Therefore, you have to be very careful about the money that is coming in upfront rather. These financial projections are based on three things. One is the assumption, forecasting, and projections. The first one is the assumption. In Sinhala, we call that Upakalpana. It is the most difficult part of any evaluation, because it is an exercise of visualizing. Remember, it is visualizing the realistic future of the project. You need to visualize what is going to happen, and it has to be a very pragmatic thing. Remember, nowadays the biggest issue is visualizing the future, and for bankers it has become such a terrible, I would say, terrible task of visualizing the future, because the environment is so sensitive, highly emotional. If anything happens, you can see how changes takes place. Now, even sometimes you can imagine what is going on in the market. Now, for an example, the classic things are happening. Not classic, fantastic things. Now, sometimes back, of course, we could see the people were cursing about gas issue. They were in queues and asking for gas. The moment that they realize the gas cylinders are in danger, I don't see anybody in the queues, of course. And I was wondering how these people cook even. I myself has a problem of finding something, but these people are not in the queues. So this is just a behavior in the market. And on top of that, I can see that there is a huge demand for kerosene oil lamps, and also for what do you call this electric cookers and all, uh, burners and all. So the market cannot meet that particular demand even. So these things, I don't think how best that you make sure that these assumptions are built into the projections. Give me a second.
ඉන්න නන් බෑන්ක කෙනෙක් පෝස් ග්‍රැජුවේට් එකේ මේ ප්‍රොජෙක්ට් එක සාම්පල් එකක් ෂෙයා කරන්නම් කියලා මොකක් හරි කිව්වා කියලා කියලා. මේ
Yeah, but so during assumptions, credit officers need to look at what would be the demand and what would be the cost of purchases. Will there be any escalations? Ideally, will there be any hindering factors like the pandemic or like this gas issue? And also, what are the other issues that we are experiencing now? Electricity issues, power cuts are there. Then again, what else? The ship problem that we had sometimes back, of course, that there was a hit on the fishing industry. Unwanted things, but these things happen because you can't manage these things. These are somewhat emotional. When the market get panic, of course, the behavior is highly unexpected. So, but within the context given, of course, you make some projections. I will tell you during the risk management how we look at that as well. So we have to make some assumptions based on what? Either you can look at the trends. So go to the previous couple of years and see what has happened. Based on that, you can develop a trend. So that's the most simplest way of doing projections in our case. And then the SWOT analysis is a very helpful tool for you to do the assumptions and look at the environment, internal, external, and look at their projections, look at their rather business strategies, and look at their strengths and weaknesses. Based on that, of course, we can make some projections. Industry norms. For that matter, of course, you should know exactly in the food and beverage example, what are the GP norms, NP norms. And if I tell you a very simple thing is, if you take a filling station, net profit ratio is always 2% less than. Likewise, you can associate with some industry norms, okay? And expert opinion or the management opinion, statistics available, market surveys. Nowadays, we got a proposal to manufacture electric motorbike. And frankly, we are doing a small sort of a market survey to know the demand. Will the youngsters buy this motorbike? We have no experience because when we looked at the market service, world market, of course, electric motorbike is a failure, except the electric vehicles, rather cars. So because of that, we had a small issue. Then he came up with large numbers, and we had a discussion with our top management, and we thought, okay, we will bring down the numbers and we will bring down the loan amount of let him to start, of course, because that really support the government policy of renewable energy. Because in time to come, anyway, electrical vehicles are a must. And as you know, some of the countries have projected right now, even they are going to leave out most of the fuel-driven vehicles, fossil fuel-driven vehicle, and they will almost everything will be converted to electric. So the issue over here is the credit officer will develop the assumptions based on the given information by the customer. But if these assumptions are going to be wrong and everything else that we are going to do is wrong, so this is the danger. So when you make assumptions, that you have to make a note what all these assumptions are in the proposal, so that the approving authority will know exactly on what basis that you made these assumptions. And you can't make any high assumptions, high percentages. And when you do a trend analysis, you have to be very careful about when you apply 10% with the volumes. If the volumes are very high, 10% increase also very high. Okay. So likewise, technically, you need to be very careful when you make some assumptions. And then forecasting. Forecasting always estimations. You estimate the numbers. Once you do the assumptions, of course, hardly anything that you have to come up with numbers. That is forecasting. What are the volumes of sales? What are the volumes of cost, salaries, and everything has to be estimated and projected. Projections also goes along with that. Forecasting and projections goes along with the same fashion and project themselves into a period. So it is also called budgeting. Projecting and budgeting is almost the same. Once you have a number has to be split into a period. So for an example, you have an estimate. Estimate can be converted into a budget when you put them into months. So monthly you can see a number. Otherwise, it is not a reachable number. So you may say 1 million at the end of the year, but how you are going to reach up to that 1 million? So throughout the period of 1 year, you have to split into 12. It is not just divided by 12 and take equivalent amount of money. No, it's not that. During the outdoor season, it may be high. During other period, it may be low. So that is how you practically do the forecasting. So forecasting is not just take numbers and make a straightforward assumption. That's very, very difficult task. So these estimates are projected into months or years using one or more methods. What are they? There are a couple of methods: box, Jenkinson models, Delphi methods, exponential moving averages, regression analysis. These are very big things, but as bankers, you know that we use only one method, basically the trend projection. You take a trend and do the projection. But you know, at the time of doing risk analysis, I will explain you this part of the exercise. Now, based on the previous experiences, you can make a projection like this. If you go like that, if you take over the period of years, in fact, practically it doesn't happen. Now, when you do a projection like this, let's say revenue, and you also will take care of the cost and then the profit, and based on the profit, you will then convert into a cash flow, and this will, the DSCR start with 1.5 times, 2 times, 2.5, 3 times. This is the typical numbers that we see in most of the projections. But practically it doesn't happen. Like it might go like this. So this part of the exercise is coming under risk analysis. So we call that stress testing. The stress testing can be put it into 3 ways. One is a sensitivity analysis. Other one is a scenario analysis. Other one is a simulation analysis. Ideally, the simulation is the most practical method of doing risk analysis, which doesn't happen in our country and also in most of the part, because it is a very rigorous analysis with the Monte Carlo simulation risk analytical package, for which of course you have to develop a lot of financial modeling and do some parameters. Okay, if you do it, of course, fantastic, because you can minimize the risk of lending into a project, because it will take lots of parameters and combinations. If you have heard of a subject called permutation and combinations, once you develop some parameters in a financial model, they can take here and there and see the combinations and look at the impact to the ultimate profitability of the project. Okay, but otherwise, if you take one parameter, change of one parameter, which we call the sensitivity analysis. And ideally, if you can do a scenario analysis where the pandemic is a scenario under which that there can be changes, various changes. That's a scenario. So you have to change the parameters accordingly. So this is an exercise, mathematical exercise with the human input. Human input. Who does it? The credit officer. Credit officer does it. I know in most of the cases you just look at BSCR, that's it. The risk analysis most of the case. As long as you are happy with that, you do it. So what has happened end of the day? Since you are not sure about this one, you ask for contract. This is what happens. Ideally, the banker should not ask for any collateral. Why we need to ask collateral? We don't do our part over here because we don't have the capacity. Number one, number two, everybody is not sure about the future. Why? Here in Sri Lanka, most of the cases, because we don't have consistent set of policies which is coming from the government. We are not a developed country, by the way. If you just look at the history over a period of time, time to time the governments have changed their tax policies, custom duty policies, and various other stuffs. Even that, you can't make long-term projections straight away. Otherwise, the ideal method would be like if you let's say 1,000 is the one that is given by the customer, you discount by 25%. So you take only 750, and even that also subject to risk analysis. Then you can be happy. This is what happens mostly because we don't agree with the numbers that are given by the customer because we can't rely upon those numbers. Or else you discount the loan volume and let the customer come with large quantum of money. Hope that you understood what I said. So finally, you have the projected projections. Projection is a forecast of future revenues and expenses. Typically, the projections will account for internal and historical data and will include a prediction of external market factors. Outcome of the forecasting is the projections. Okay, right. So you have the projected income statement, cash flow, and the balance sheet. So we don't do a practical case study. It's very difficult to do online, of course, because I am isolated here over here. I am alone. Hardly any support from you. And I have enough case studies, but I don't have the, what do you call it, pleasure of doing case studies on projections because you need to do it practically to understand what it is exactly. Right. If you were here, that I would have done it. The factors influence in the projections. Some of the barriers or some of the factors that might have a pressure on projections. You might ask the customer, what are your new business strategies? Okay, how much? What are so with that? Of course, there will be a jump on sales. That's all right. And then estimating the financial requirements that we are doing, working capital requirement and investment requirement can be factored into the new projections. So with that, you can increase the sales volumes. Seamless functioning, we assume nothing will happen, but it is not. The reality, it may not be. Informed and correct management decisions. We believe the management will be as it is, and there won't be any dispute among the management, and achieve overall success as projected. They will achieve everything and control the cash flows. They will not take money out of the cash flows, and they will not divest it, and they will not sell the project machines, and they will implement whatever the strategies that they have promised with the bank. And economy and the political impacts will not have any impact drastically. And if that is so, there will be some hinders for the projections. Environmental will be not so volatile, not so hardly competitive, and it will go as it is. So these are, if it not, what happens is the projections will be hampered. So this is just a format of income statement. Right. Now, now we come to the point of determining the investment or working capital requirement, the purpose. Previously, what we did was we just looked at the projections. Then only we could see the DSCR and ISCR. Now we determine the working capital, the investment or working capital requirement. Investment requirement is all about the investment in fixed assets, building, plant and machinery, things like that. In it, of course, a couple of things. If you just look at the land requirement, at any point that the banker should not fund for a land which is not going to generate any return, because there are people who try to approach the bank to purchase a land for speculation purpose and thinking that later they can sell the land, but during the loan period, what happens is that they have to pay the loan from the income that they generate from the existing business. That will be a huge problem for the current business. Okay. And title. It has to be a very clear title, ideally absolute ownership with the transfer deed, but depending on the policy of the bank, leasehold rights also taken care of. Generally, I would say, I'm not sure about some of the bank's policies, of course. In my bank, of course, we undertake only the government leases. Because when the government leases away, of course, they have a policy either 30 years or 99 years, but minimum 30 years we require. Because in it, we undertake only, we take the mortgage of the leasehold period. And, at a point, if the loan is defaulted, we will auction only the remaining leasehold period. So there hardly any value in it. So you have to be very careful. You have enough length of leasehold period when we grant the loan. And there is a condition, there is a presumption that the government will renew the leasehold period because these particular lands have been given away to the investors for development purpose. And also, you need to be very careful in certain areas like Anbadapula, Poronnaru and all. These lands are leased on particular conditions. One of the things is low-income earners are being given away leases on which transfer is, in case it is defaulted, transfer is sometimes prohibited, and otherwise you have to get the permission from the divisional secretariat. So if you want to transfer it to somebody else, the bank, at the time of default, it has to be another low-income earner. So it's not practically happens. The feasibility of the location and where it is located, and is it the right place for this particular industry? Sometimes people used to buy lands at a very high rate of purchase, where ideally that particular project can be located in a remote place. Why should they? An acquisition cost, stamp duty, and the broker charges and various expenses might be factored into the acquisition cost, so that the purchase price itself, the agreed price itself, will not be a valid one, and once everything is accumulated, the acquisition cost may be expensive. And then value of the property, where we look at the for sale value. Value is more concerned. Now, if you take, for an example, this bottle ideally cannot be valued. I think you can see the bottle, huh? Can you all see this bottle? I used to ask this question from each and huh?
No.
You can't see.
Now can see. Now can see.
Right. Now this is not a broken one. It is a brand new bottle. Can someone tell me value? What is the value of this bottle? It says the price of the bottle is, where is the price? Yeah, 35 rupees. Price of the bottle is 35 rupees. I'm asking value. What is the value of the bottle? This bottle. Any answers? Now this bottle, of course, hardly any value, no? Zero value. So because this belongs to me and it was given by the IBSL to drink while I'm doing the lecture, and I can't resell it. So there is no realizable value in this brand new bottle. Some of the products that you purchase from the shelf itself, hardly any value, but there's a cost in it. So bankers will look at only the for sale value. It's not the market value, but the for sale value. For sale value is the value that you can realize at an arm's length. That you have to realize very properly. Because if you give a valuation to a valuer by the client, he will have a different value than the bank's valuation. Because the purposes are too different. Our valuation is lower than the value done for client. Because the value done for client is for market purposes, selling purpose. But for us, it is for mortgage purposes. Once we try to sell it by auction, it's a foreseeable auction. So it is, everybody knows there's a problem in it. It is not on negotiation purpose. It is not on negotiation basis. Okay. And as a result of that, most of the values are lower than the market prices. The other one is the development cost. Now there are lands where that you need to put more and more money to develop to that level. That might incur other cost. Some of the cases that it was ignored, like, and later on you realize that you have to adjust the loan further. And you need legal access to the property. Legal access. I can remember there was a valuation done by a valuer. And he had reached there. And there had been a road, but he was not able to reach there. So that the valuation was zero. There was an argument between the customer, but valuer said, no, I can't value it because I can't reach the property. That is what I exactly do when I do a value physical verification or other business inspection. I always used to take the site plan first, because the legal part may have done by the legal officers, but to do my visit, I need the site plan. So the first thing that I do, I get off from the vehicle and sit just in front of the legal access. And thereafter I see the boundaries to exactly know the territory which is legally owned by the client. Very important, and you need to be happy with the access. Motorable, you can reach there very easily, and also the width of the road. You have an argument like 10 feet. 10 feet is something that is documented, but more than that, if it is a garment factory, can the container load can be taken over there. So the 10 feet won't be feasible. Other one is very important, social and environmental issues that I discussed with you. There I didn't discuss the social issues, especially when it comes to large project. Let me share one of the examples, then you will realize. We did a hotel in Anuradhapura on the bank of Tisa River, and by an oversight, I also could look at the KVA requirement, electricity. It is almost in a remote place where the access is in through the village. There are a lot of large, very valuable trees and all, besides the road. And then once it is built only, we realized that we had to fix a transformer there. So to fix the transformer, you have to wire from the main road. When we try to wire only, the people object. They did not allow us to cut the trees, but entrepreneur himself got the support of the government and did it with a very difficult challenge, of course. Those are social issues. So some of the projects have been stopped by the society, and the politicians also get involved with that, because some of the sentimental things are there and might have an impact on the project. Right. Then the buildings. Of course, the building plans need to be approved. And other approvals, maybe from the UDA or කැනීම් කටයුතු වලට පතල් හා භූමි එහෙම ඒවා තියෙනවා. And then coast conservation department. If you want to put some boats in a canal, you have to get permission from the irrigation department. Okay. Okay. And look at the extent of the building. You can roughly look at, not roughly, exactly look at the extent of the building, and work out with the BOQ. Building line or straight line, you must be knowing what they are like. I mean, the building has to be within the building, approved building line and straight line. Straight line. Straight line is applied in most of the cities, whereas the building line is everywhere. Both are not required in certain remote areas where those are not concerned. Okay. When there are public big roads, only all these building lines and straight lines is come into effect. Whether there is any electricity connections, and then again ventilations, elevators, wastewater management.
Sir,
Yes.
can I ask you a question? Sir, now when we are lending for this land purchases, for a blockout and resale, what are the specific things that need to be looked at than the normal evaluation or whatever the checking?
If it is a large land, first of all, you need to get the permission from the fragmentation board. Okay, they don't allow you to block it out. Like for an example, if it is a coconut land with, I can't remember the threshold.
That is 10 acres.
Okay, 10 acres.
Rubber 50.
Okay, good. Thanks. So that is number one. Number two, then you have to do a blockout plan and get it approved from the provincial council or the divisional secretary. They have to approve it, first of all, because in this particular piece of land, if you block it out, the road development has to be allocated. Children's parks have to be allocated, and water flow has to be provided, and water supply and electricity supply has to be provided. All these need to be there in the blockout. Otherwise, that will not be approved. And also, once it is approved only, because if you try to take the mortgage of this particular land, and later on, by the time you sell it, of course, you have to release piece by piece by writing a deed of release.
Yes.
Okay. So to do the deed of release, you have to value each and every piece of land, because that has an impact on your loan. Because supposing if you grant a loan for the entire land, and with the settlement of piece and piece only, that the loan will get settled. So to understand that, every piece of land has to be properly valued, not only the entire land but also the pieces of land, because within the context of the development of entirely, the valuation system will be changed. Okay. Yeah. And also on top of that, sometimes in certain locations, you may require the UDA approval as well. And also you have to be very concerned about the minimum requirement of blocking out, like 6 perches or 10 perches or 15 perches or whatever it is, depending on the territory. Yeah, these are the things that you need to consider.
Yeah, sir, actually I have a case pending with me, and the requirement is to purchase a land which is very close to an industrial zone.
Okay.
So I was a bit reluctant to give the approval, do the evaluation, because when you go very close to industrial zone, there will maybe some problems later on, because industrial zones are normally located in a area where the civilians are not very widely spread. So that point I have raised there.
Mhm.
So still they are trying to push it off.
It won't be a big problem, because if you just look at the other part of the world, even close to industrial zone, there are housing complexes. And what you need to look at is, if it is a proper industrial zone, that will be covered with a big parapet wall. And most of the industries are not allowed to run with the big sounds. They need to be soundproof. Given the industrial zone is in good conditions, having a housing complex close to that is not a problem, and there is a demand for which, because if people are working in it, that's a different case. But when there is an industrial zone, uh, the the rest of the area also will get developed.
Yeah,
There is a
yes.
there's a parallel development happens along with the industrial zones. Even if you just look at the Katunayaka BOI zone, and close by Hart, there are enough residential complexes. It's not a big issue for me.
That won't be a big issue, no?
No, it won't be a big issue, because generally I have my working experience in BOI Biagama.
Yeah.
It is a big area where next to that, of course, there are residential areas. No problem.
Okay. Thank you, sir.
Okay. And cost of the construction actual BOQ, because you have to, I discussed this one, very, very important, because people do prepare BOQs for various purposes. And finally, the bank and the client will be in trouble if the BOQ is wrong, because later on, again, the banker will have to come up with additional loans to complete the project if it is half-hearted, because it is already married. So be careful and try to revisit the POQ several times with your understanding, and discuss with them if there are any projects. Because I myself experienced couple of cases where the BOQ was wrong, and finally I had to rework the loan. Even recently I did one, because couple of reasons. If there is a delay in construction, the BOQ will have to be adjusted. If they miss out certain things, the BOQ will have to be adjusted. If they uh, incorrectly price the materials, the BOQ will have to be repriced. And also purposely they do it for smaller projects, because knowing that if the BOQ is large, their contribution is large, so that they can't do it, and they manipulate the BOQ and try to get the loan from the bank, and later on they will keep on asking for the loans. So we have to be very careful, because I have my own experiences. Plant and machinery, initially you need to look at the pro forma invoices, and once you get the pro forma invoices, look at the supply credentials. Go to the internet, look at who are the suppliers, are they reputed suppliers. If you are not sure of them, send them an email, call them up and see whether they have enough experiences. That is a must, especially in other part of the world, because there are some agents even in Sri Lanka. That would be all right. You can speak to the agents here in Sri Lanka and see whether they have experiences of bringing down such machines and installing them. And also they will be responsible for the kind of warranty periods and all. So that would be much better, rather than directly importing from the supplier. And if it is so, look at the agreements. There are sales agreements rather than the pro forma agreements. And in it, of course, there will be some payment terms, and then again installation terms, and then again training conditions. If they are coming down here for training, what are the costs involved? Because everything has to be factored into the final cost of the machinery. Applicability, especially with regard to the capacity and all. Can they run the machine with the available raw material? I can remember one time, of course, We were talking about bringing down a machine. The problem was we didn't have enough raw material over here. So the scale of operation is a problem. You can bring down a machine if it is not running for the 6 months in 1 year. What is the use of having a machine over here? So those applicability and can the particular machine manufacture the expected outcome? Even there also I have enough experiences. Sometimes you bring a machine which is running in China, which is not running in Sri Lanka, because sometimes the climate conditions may have some influences. My experience is German machines are excellent. Because for an example, if I tell you, you know, in the printing industry, Heidelberg machine, which is manufactured in Germany, imported from Japan, manufactured in 1970s, are still funded by banks because that Heidelberg is recognized as gold in the printing industry. Whereas some of the brand new machines which are coming from Japan are not really good than the Heidelberg machine. Okay. Cost of purchase, selling price, duty, delivery cost, installation has to be factored into the final cost of purchases, and that is the loan amount. So on that only you need to decide the loan amount. Otherwise, if you just look at only the CI price and funding, of course, he will be in trouble. Unless, because sometimes the customer doesn't tell us exactly the duty structure, delivery cost, and installation cost and all. Please ask them and finally make out the entire cost of it and decide the amount of loan that you are going to give away. Brand new, no problem. If it is reconditioned, of course, you need to get a valuation done over in Sri Lanka. And in the valuation report, the valuer should tell us exactly the lifetime of the machine, because otherwise it is just a metal stock. Okay. And please see the valuation report is a recognized one, and in it, the lifetime is mentioned. Because generally the machines are written off within a span of 5 years. But if it is a very old machine which cannot run even for 2 years, what is the purpose of giving it? It is just a stock of metal. So you have to be very careful about these conditions of machines, and those are the payment terms which I discussed you. Sometimes you know that advance payment are mentioned, and remember nowadays no advance payment at all. Even all these deferred LCs only will be accepted nowadays. But in generally, there's a threshold of maximum payment of US dollars 50,000, not more than that advance payment. So once you undertake a loan, see whether there are advance payment more than $50,000. So that technically you can't make that payment, so that the entire loan will be in trouble as a result of that. And also, is it under LC terms? Because otherwise what happens is, if it is under LC terms, sometimes they take about 6 months to manufacture the goods. And during which period you have to settle down with the commercial operation period and the construction period and machinery installation period and everything together, because finally your focus should be start of commercial operations, right? So you have to do the timing and decide the grace period and the capital installments and everything along with that. Right. So before we go to the, now we have discussed about the investment cost. Now the next is working capital cost. So to do the working capital cost, I have to discuss the working capital requirement calculation, which is a lengthy discussion, for which I have to upload another presentation, and case studies are already uploaded, I think. There's a presentation called working capital financing. Is it uploaded with you? Sure. No, it is not there. So what we will do is we will stop for the day, and the next week we will start with working capital calculation, which is very important. We will try to complete these 2 case studies, and then you will comprehensively understand working capital financing, and not working capital management, by the way, because we don't do the working capital management. Working capital management is done by the client itself. We need to look at the working capital financing. Right. Any questions?
So one little thing to clarify,
Yes.
this the valuations with regard to leases or the vehicles, nowadays we are getting, you know, very large valuations, and we had to adhere by the LTV regulations. So we can of course go up to 70%, but sometimes we feel that valuations are very high. But when you check the market, also market rates are also same. Like, so what is your opinion about the vehicle market in near
Okay.
future?
Now, you need to remember the Asian crisis. Asian crisis happened as a result of bubbling. It was a asset bubble. Now, this is also similar to asset bubble, and the prices of vehicles have been bubbled. Now, actually, even I got a message from my insurer to increase the value of the vehicle because to reflect the market values. Now, for me, my personal opinion, like this is just a temporary reflection, but I don't think we should be par with the temporary reflection in the market by increasing the loan to value ratio so much. So ideally, as an industry, uh, we should not support the bubble because obviously one can argue this is not a bubble because this is at the backdrop of not having the sufficient supply of vehicles in the market. But some of the things I can't discuss in public. There are manipulations happening in the vehicle markets by the people who are involved. As an industry, financial industry, you need to be very careful about bubbles because bubble is something which is created by inflation. Inflation is not the price inflation, not the general inflation that we talk about. This is an artificial inflation which is created uh, as a result of not having enough supply. The moment that you have supply enough, what happens is that these old vehicles prices will drop like nothing. Because the moment that people see the brand new vehicles, the moment that people have money in their hand, and they will never take care of all these older vehicles and they will go for brand new vehicles. That was a passion that we had over a couple of years in the recent past. And people don't like to buy the older vehicles. They would like to replace their vehicles with a brand new vehicle. In that context, we will have a repercussion. You can't forget that because it happened to the pawning industry as well. We never thought that the pawning will drop like that, and we had to bear that shock as well. There was no reason for that industry to collapse at a point, of course. If so, and I don't think vehicle industry will also have the same repercussions. So you need to be very careful. What I could advise is that as a bank, you have to take a policy and time to time. And as a policy, of course, there are discourage areas and encourage areas of lending. It has to come from a policy level. And in it, of course, the bank need to take a call on that by deciding exactly what is the loan to value ratio. Only thing what you can do is you can discount it to a certain extent and ensure there are other collateral or conditions applied to the particular leases. That is how you should mitigate the risk of lending. You should not stop lending even. I know that leasing industry is very, very rigorous and also very aggressive. So simply because of the aggressiveness that you should not get caught to the bubble.
Thank you, sir.
Okay. Any other questions?
So with regard to the vehicle industry, the people who involved in buying and selling in local market, so we are getting requests from the client to like enhance the STL amount and the tenor because due to this price hike. So like, do you think like this situation will remain for another 2022 also? Because as per the new budget, like there's no change for the importation of vehicles and all.
So the request is coming from the clients who bought the vehicle on loan or
No, like
the traders?
traders. Because currently also they are enjoying STL. Let's say like a client enjoying STL of 20 million per 30 days. So now they are requesting to enhance the amount and the tenor. because because of the price enhancement, they can't play with the existing limit. That's what they tell.
I have a small question from you, that the STL is granted for importation or trading vehicle here in Sri Lanka.
Trading vehicles.
My first reaction is that that kind of a STL facility is not encourage lending practice, because if you had some clients who are importing, of course, just to compensate them, of course, you have to give it. But otherwise, tenor, of course, you can extend. But your question was from me, whether will this kind of situation will exist in the year 2022. It's a very macro level question about the entire economy. As you can see, yesterday we were downgraded by Fitch Trading from CCC to CC, knowing the panic situation here in Sri Lanka, and the government is working out with some measures, like with that rating announcement. Immediately the central bank reacted with some explanation. They will come up with another 6 months. I think forward-looking arrangement, and they are negotiating with couple of countries to bring down some dollars, and there will be some other measures that might taken up, which I can't discuss over here because it has not happened yet. So, and also, something called SOP, Standard Operating Procedure, has been issued for assembly vehicle, and I'm also working with one company to develop a credit line. And so vehicle assembly will be developed and promoted here in Sri Lanka, not only for cars, but also for other smaller two-wheelers and three-wheelers even. So thereby, still the problem is that there is a component of importation. And we are working with two companies, and the government policies, at least 20% local value addition has to take place to allow assembling here in Sri Lanka. So that is the area that is the government is encouraging. So in the next year, I believe importation of vehicles will be curtailed, and because the government also can make use of this kind of a situation to convert the government develop, or rather implement the government policies very easily, rather than just importing. Because what has happened is, in the past, if you could see, some of the luxury vehicles brought in unnecessarily. That is my personal view, by the way, because we can't afford to do so. Ideally, we should have light vehicles for the purpose of simple transportation. So that will be encouraged. But in the next year also, I don't think this vehicle importation industry will have a lucrative position. They will have to struggle, or else they will have to look for something else, because you can see how people react. Like, I mean, that at the backdrop of this bursting LP gases, of course, people opted to some other options. Likewise, I believe people may go with look at India. If you go to India, you can't see any other lot of foreign vehicles. Entirely, they are local vehicles. Even I can remember my experience traveling from the airport. It was a very tiny vehicle. Even there was no room for us to locate our baggages. They put on the roof. I don't think that is the right method. But look at some of these countries, how they have converted their local policies at the backdrop of some crisis. So I will personally think, because given the situation is so conducive for government to implement the local driven policies, next year also will not be a good chance for importation of vehicles, except agriculture, commercial, and those type of vehicles. Any other questions? Okay, no questions. Let's meet in the next week. Right. Thank you.